Hi, and welcome back to the Business Career College video series. In this video, we're going to look at cost sharing with respect to health and dental insurance. So we've seen in previous videos that insurers are going to look to share the costs with the plan member. And there are some reasons for this. The first is the idea here is to create some impetus for the plan member to actually think about what they are submitting in terms of claims. That is, if they know that they're going to have to pay a chunk of every claim, maybe they think twice about whether the procedure that they're getting or the prescription that they are getting filled is actually necessary. And the second is simply to reduce the insurance company's costs, which in theory should keep premiums manageable. So to see how cost sharing works, we're going to look at a plan member. We're going to look at Paul. And Paul has some benefits. They might come from an individual plan or from a group plan. Either one might have a structure like this, where we will have some deductibles. And there are a few different ways deductibles can apply, but for the purpose of the LLQP, the way that you would normally see them is you would see an individual deductible. That doesn't mean for Paul as an individual. That means for each individual covered under Paul's plan. So let's say we have an individual deductible of $25 and a family deductible of $75. That family deductible would be a cumulative maximum deductible that could apply across all family members. And then we'll give Paul a coinsurance factor of 80%. Okay, now let's say under Paul's plan that we have three family members. We have Paul, his spouse Patty, and their three children, Aaron, Jessica, and Stephen. And Aaron is 8 years old, and Jessica is 6 years old, and Stephen is 3 years old. Okay, so we've got the three family members. So what would happen here is, let's say throughout the year, Paul goes to the dentist first. So Paul's the first one to the dentist for the year. He would have a $25 deductible. And then Patty, later in the same year, also goes to the dentist. She would also have a $25 deductible. And then Aaron goes to the dentist, and Aaron would also have a $25 deductible against any expenses incurred here. But at that point, we have actually applied three individual deductibles of $25 each. That is going to bring us to the $75 family deductible limit, which means that now if Jessica goes to the dentist, she would have no deductible because we have hit the $75 deductible. And then finally, Stephen would have no deductible if he should go to the dentist after the others. So let's have a look at how the dollar amounts would actually work here. Let's say that Paul submits a claim. We'll say it's a new year here, so new deductibles. And he submits a claim for $360. So the first thing you'll find is that it's not necessarily going to be fully covered, this claim. We have to look at what is eligible. That is, the insurer will compare this to their fee guide, which defines what is a reasonable and customary expense. They might say, no, in fact, we only cover $320 for that particular service. That's all that's eligible. So you're not going to get the $360 covered. We're only going to use $320 as the basis for our claim. So now what will happen is we will first take off the deductible, the $25 deductible, which brings us down to $295. And we would then apply the coinsurance, an 80% coinsurance factor. In this case, And we can see then that the insurer will cover 80% of $295, which is $236. That will be the eligible claim. That is the amount of reimbursement that Paul will receive for that $320 expense. Okay. We're going to also look at coordination of benefits in a separate video, but it's important to understand this basic bit of math first. Thanks very much. I hope that helps.